Welcome everyone, and in today's video we're going to be talking about a options trading model, particularly a short-term trading model that you guys could utilize for any stocks. And the examples here that I'm going to be giving are going to be mainly for the most liquid option stocks, but for the examples in this video it's going to be mainly for those highly liquid stock options, in particularly the Mag 7, or for example Apple, AMD, Amazon, AVGO, Palantir, Tesla. The reason why I chose these stocks is because again you have consistent highly volatile movements, to where for example you wouldn't be getting in other stocks, like Comcast, for example, or AT&T. And before we continue, if you guys enjoy this video or find it insightful in any way, please be sure to comment down below, like and subscribe, and let's get right in. So this option model is very simple and it follows a very simple concept. The first and most important one I would say would be number one, this is a buying only model. You can inverse this and also utilize this for a selling only model, or even do both. But the reason as to why I'm saying this is a buying only model is that by isolating specific environments that you're looking for in the market, it makes it a lot easier for you to pick up on patterns and certain type of price action that you're looking for, and that way increases your consistency and probability because you're only looking for specific things on a daily basis. The second thing is that to buy in any kind of scenario, you have to buy below the day open. And for example, this large black line here that I have here noted, this is the 9:30 a.m. open. So if I want to buy, I cannot buy anything above it. I must buy below it. And this is a rather simple concept. You guys may have seen this, in school, SMC concepts, ICT, various other teachers and mentors in the trading and investing community as well. And it follows a very simple premise of what's called premium and discount. So for example, let's take Black Friday as an example. If you're buying something, you want to wait for that Black Friday, because that way retailers are going to drop those prices and you will be able to buy it at a discount. The same concept is being used here, except in terms of we're using a time period to where, for example, market makers may want to, let's say, dollar cost average below the month open, year open. But in our case, since we're trading a short-term scenario, we want to buy below the day open, as we are buying on a discount for the day. And as I said before, really the main reason for this is that by buying at a discount, you are increasing your chances of probability for a buy scenario to work out. And you guys can see many examples of this. If you go, I'm only on Apple, but you guys can do this really on any stock. You can see that there's higher chances if you buy below that day open, your chances of at least coming out green, either buying shares or options, is a lot higher than you buying, let's say, already above the day open. And the last criteria of the model is the actual structure, the bullish structure that you're looking for, or the type of price signatures that you're looking for within your specific model. Again, this can be customized in any way. This one will really, I'll leave it up to you guys, but I can show you guys mine and I'll show you guys as to what I'm looking for in price before engaging in anything. So again, very simple. I'm looking for bullish structure and points of a reversal. So for example, in this case here, we have Thursday of last week. We can see Apple opens here. We trade lower, getting into a discount, right? And I'm waiting to see some sort of shift in structure. So first we have this high, then a higher low. This is my first sign that we're possibly getting something, but there's no engagement as of yet because I'm waiting to see some sort of close above. Now you may run into scenarios where price doesn't close above a particular high. It may be, you might want to be wary on it, but to be safer, I always talk about how you want to use close above a previous high. So in this case, we can see we have the higher low and we have a higher high, and look at the volatility that was in there. All these displacement candles here with the close above really provide me a possible scenario to see price heading higher. Now again, the point of entry could be really dependent on to you, to where you can get in here at a fair value gap or some sort of Fibonacci. But I'm already confirmed where even if I were to have entered here, I don't have to worry because I know price, we closed above this high and we also made another high above this high. This is liquidity taking or stop hunt for anyone getting in here. And then we then see price trade up higher once again. And in terms of these strikes that you guys may want to utilize for this, I follow the 2 to 4% rule, to where 2% being, sort of minimum gauge. Anything 2% or below is that minimum. Anything 4% or above is the maximums. So for example, in this case here, if you entered long here and you're looking for that 4% range, the highest out of the money, this is high, this is more of a high end risk, would be around that 256-ish area. But again, like I said, my model, I would probably say 2% or lower is going to be the minimum target for a sweet spot ideally. Now the point as to why I have this highlighted here, for example, before I talk about that even further, is that again, within the first hour of trading is where I want to see the most price increase. because as option contracts are volatility based, if we start seeing a high movement upward within that first hour, my contract will increase in value faster and I won't have to worry about drawdowns to, let's say, for example, if I held this throughout all this consolidation trying to take this higher, I'm going to be burning through it. Even though it's a weekly expiration, it'll be a lot better if I'm looking to scalp this, you know, in a quicker fashion, where we go up and we're out within that first hour, as I said before. Now, of course, you can also hold these contracts, you know, it doesn't matter. You can hold it for the next week or even further. It's totally fine because again, it's a weekly expiration, but ideally this type of strategy is looking for shorter term swings. And of course, in terms of the strike range, you don't have to do 2 to 4% because again, it could be extreme depending on where you are. You can also do, for example, in the money or at the money, and then your risk tolerance and your reward tolerance will really depend on your personal preference. I would say for smaller accounts, ideally you're looking for about 50% or higher on those contracts. And then for anyone larger accounts, it doesn't really matter in the sense where if you're putting $10,000 down, you know, 10% or 20% is already well more than enough than you need. You can consistently compound that over time to where, for example, let's say you started off with a 50 or 100% goal target, you can easily start dropping that down by 10% once you're, you know, you 10x your account over time. Now, the indicators that I'm using in this video, if you guys want me to make a video, please be sure to comment down below. I'd definitely be able to make a video on that. And also I will be making a video on doing the same type of concept with QQQ, SPY, SPX and NDX options as well. Now, for any of you who trade 0 DTEs on those, I will be dropping a 0 DTE version of this same model to where it follows a very simple concept. It's the same thing. You're just looking for buys because again, by isolating specific environments that you're looking for in price, it removes, you know, sort of this guessing part to where, you know, you're only looking for one thing and one thing only. So here on OptionStrat, and this is a really easy to use website that breaks down any type of option strategy you're looking at. And in this case, we're going to be looking at Amazon here just to show you guys a quick example. So for a quick example, I'm running the 232.50 strike price, which at the time of purchase, I'm going to show you guys was 2% out of the money. And that goal being, we're looking for that 50% goal. So if we look at the historical chart to show you guys how this has been looking like throughout the whole day and how the power of, you know, if price moves up, you know, you bought this at around, you know, 1010, or if you waited for that little higher low dip there at 1020 and you only held it to 10:48 a.m., you know, really there wasn't much time that you really needed to hold this for to get the gains that you were looking for. As we can see here, if you bought it for around 143 or 149 with that high of 217, I'm going to show you guys here on the chart as that right at the high of that level, we were ranging around this area here between 40 to 55% gains right with the time of purchase. So this is what I'm saying, to where again, you can consistently scalp these lower target probabilities where again, it's very easy and consistent to get gains of this nature, you know, especially if you're looking, you know, to add on a little bit more contracts. Let's say you did about 1,000 risk, you're going to be ranging between $300 to almost $500 profit within that range already. And like I said before, you guys can hold on to this. If you're seeing price action in the charts that's still bullish, you didn't get a close below or any kind of bearish, you know, change, you can easily ride this to even the higher levels to where, for example, let's say price is nearing that 232 level, you've already made back about 100% of your gains, which right now we're about 77% up already as of now. And you still have 4 days left of expiration. So if you, like I said, if you also like the larger time frames, hold that contract and, you know, keep up to it. And, you know, if also you'll have a stop loss to where, let's say the next day we open, I don't know, it goes down to maybe 231, or you don't like how it's looking, you can close it there and it'll still be at a profit. So I hope you guys enjoyed this video. Please be sure to comment down below, like and subscribe. Also, I have a free Discord if you guys want to join that as well. And I'll catch you guys in the next video. Peace.